Let's have a look at the China stock market ETF. So first off, read this disclaimer carefully. And do your good deed of the day by liking and subscribing. So China is here, it's in North Asia, 6-ish% from the 52-week low, but we are 34-ish% away from the highs. So this is the third worst bear market on the list. So the old saying is you want to buy low and sell high. And when we zoom way back here, we are literally at 2008 global financial crisis lows. I mean, we're not even far away from okay, it's not like the all-time low for the China ETF, but it's really low. So you are not in any way, shape, or form at risk of buying China too high. That is not the problem. The big question is this the low? So let's explore a bit further. So from a purely horizontal support perspective, this is obviously a very interesting place to buy. Previously, when people bought this level, long term that is, it was very interesting. It was a pretty nice journey. So sure, there are reasons why the Chinese stock market has gone down. But looking long term, I am quite bullish on China. Even though there are all these sanctions, yada yada yada, China, it's a country with a population with very high intelligence. They are advancing very fast, especially given that it still is an emerging economy. Like this isn't like a fully developed nation yet. Daily data points, we are seeing some bounce here from key support. We saw interesting reversal yesterday. Are there news? No. Okay, so let's look at RSI and the PPOs. So looking at weekly RSI, we're not at extreme buy levels, but that doesn't mean we are going to see those either. So looking at the PPOs, we are pretty low. It's not like extreme low, but yeah, let's look at the dailies. So accumulation distribution is really showing some bullish divergence. So there are some actors here investing. Yeah, bouncing from RSI support. This is pretty interesting. So let's go into my notes. The laboratory. So the key thing is horizontal support. That's the big thing. So I will now give this from a long-term perspective. I would say that from a long-term perspective, this one is an 8. It's very bullish, very interesting level. Shorter term, it's definitively more tricky. But there's a lot of ways to get exposure to China. Long term, you might have mutual funds. You obviously have this ETF. You have the options market as well, where you can enter some longer term positions. I have one myself that will benefit from the theta decay of options. So yeah, I do think I have a pretty good probability there of being able, before expiry in a couple of months, to exit with a nice profit. Obviously, China could crash from these levels, but we are really, really low. So seasonality here to the left, not looking that bullish. There's overall a bearish trend. Looking at the table view, 8% loss so far for January, which is definitively a rough start to the year. February, though, is not that bullish. However, when you see here that when January has been bearish, we quite often see some bullish February. So if you look here at 2022, 2023, bullish January, but then bearish February. But yeah, I do see why the seasonality is not that bullish, but the context here is different. But yeah, purely objectively speaking, given the data we have at hand, seasonality is a minus. I would give it a -2. Then again, we have seen a lot of loss already, so I think it's definitively different. So let's compare China with United States of America. So yeah, let's go here to performance. Year to date, definitively underperformance from China over the last 3 years, minus 24% versus 9.57% gain for America. The last year, literally almost like the opposite. So China is very low. PE, 10.6 for China, almost 18 for America. Beta is lower. Yield 3.5% versus 1.37%. That's a big difference in yield. Holdings 51 versus 1,000. So what happened to the S&P 500? Okay. That's unexpected. Okay. That doesn't make sense. Unless there's like a ton of A and B shares though. Okay, so here's the breakdown. Finance big in China, tech services behind it, then retail. Tech is very big in S&P 500 because you have like tech services, electronic technology, health technology. Yeah. But let's go into my notes. Fundamentals, I would give an 8. I mean, it's undervalued. It's been massive bear market. I think that it really is excessive. And the key thing, of course, when you compare America with China is that one of them is a highly developed country, America. China is an emerging economy. Given that it's an emerging market, it actually is quite a compliment when America like goes all in to try to oppress the rise of China, like with all kinds of sanctions, through Nvidia, so they cannot get the chips and all of that. That is very interesting. The reason why America does that is because it understands that China actually is a threat. It actually, so it's a bit of a compliment, though. I'm pretty sure that the Chinese authorities do not appreciate the compliment that much, but still, it's a compliment nonetheless. Yeah, let's just compare it against BABA as well. So, here are the weekly data points. Statistical correlation with S&P 500 is a whopping 0. So if you want something in your overall portfolio that isn't correlated with S&P 500, there literally is 0% long-term correlation between the Chinese and the American stock market. With the WPL, which is the broader Pacific ETF, 86% positive, 97% with BABA. Daily data points, minus 51% with S&P 500, 1% with VPL, and 93% with BABA. So yeah, there certainly is a tight link here between BABA, and the BABA is also very interesting from a chart perspective. Down massively, bouncing from support. Yeah, they have earnings on the 31st. BABA. Yeah. Here's the seasonality for BABA. Okay, so now let's compare. We will compare the S&P against China. FXI. SPY, like that. And we have seen massive underperformance from the Chinese stock market. And there have been times of massive outperformance, like you can see here, from 2005 all the way up until October 2007, China outperformed. And from here you can see October 2008, during a very bad part of the bear market, the housing bubble, all the way up here into July actually of 2009, you actually would beat the S&P by being in the Chinese stock market. So that's interesting. Looking at FXI, we are at a very interesting long-term level. We saw it back here. Didn't lead to a long-term low though, but this is a very interesting level. Daily data points, same thing. Looking at the seasonality, some bullishness into February table view, not that promising. But of course, the table view and the seasonality is very much affected by the long-term bearish trend in China, in the Chinese stock market. So let's go here to the laboratory. I would give a 3 here. I would give more, but we still need to be cautiously optimistic. But this is really, really, really low. So 4.3 in favor of the bulls. We are at horizontal support. I think this is a very interesting opportunity here in the Chinese stock market. The caveat I have here is that I think, for a major stock market to sort of form a low, that can take some time. So I would either get into the actual, to like a mutual fund to have long-term exposure, or I would look at, of course, the FXI or other ETFs that give me exposure to China. Another thing is to go into the options market. If you are going to like hold, you could of course buy a leap. There still is the option decay though, so that could become an issue. Alternatively, you could be a net seller of options. You definitively do not want infinite risk. So you want to cap the risk, but if you go like further, go a bit out in time, then you can benefit, of course, from the option decay. But of course, if the security goes in your direction, which would be bullish, then up, then you would benefit from that, because then the options that you sold, they would then become worthless or close to worthless. You don't need to wait until they become totally worthless, though. I made recently money but being a net seller of Snap options. As I was bearish, right, on Snap, and I exited with like a 67% profit. I could, of course, have like waited all the way into option expiry to sort of a gamble on getting more, but sometimes when you have a nice gain, it's not a bad idea to like close it. So yeah, that's my take on China. When it comes to artificial intelligence, which is like the big thing that America is worried about when it comes to China, there could be some surprises. Okay, so we do know for a fact that the reason why GPT-4 is so much better than GPT 3.5 is because of more data. Well, there is a country that doesn't care about data, who they collect data on, that would go further when it comes to collecting data and processing data than most other countries, and that would be China. They have different rules when it comes to that. When it's in for the goodness of the state, then they will go pretty far. Obviously, that's problematic when it comes to human rights, personal freedom, autonomy. When it comes to artificial intelligence and training an AI, that could be a very big advantage and could lead to a very powerful AI that's far beyond GPT-4. Because the jump from 3.5 to 4, it's to a significant extent the data, and the theory now in the West and other countries is that the next step for AI models will be to process more data, synthetic data, and also videos and stuff like that. But there still is a limit. Like if an AI could just process everything that comes through like a security camera, listen to everything, process all the information that it can get access to, then it could lead to a pretty huge jump in the abilities of that AI. The caveat, though, is that due to the ideology in China, there is the probability that they actually might not be comfortable with the idea of like a super intelligent AI. So the very same ideology that might actually open the door to like super intelligent AI in China might also be the reason why they will not do that. So they're sort of stuck there. So it might be all what might determine the direction they pick is how an almost super intelligent AI reacts. Like if that AI, when they interact with it, they test it secretly. If it doesn't, lead to any red flags, then it might actually go live. But if they get a bit worried about the way it behaves, its intent and stuff like that, then we might not see the super intelligent AI emerge. So yeah, interesting times ahead, but long term, definitively bullish on China. And stay tuned for more.